So the first one, I think, in the relationship between IASB and ISSB is that they've both got the same audience, and they're both therefore constructing what is useful information for those. But it would appear that there is a difference in the level of certainty that may be required for recognition, or let's say first disclosure, rather than recognition. So disclosure under either ISSB or IASB. In other words, that there is the likelihood that things that may affect an investor's decision around sustainability may affect that decision with a lower level of certainty than the things that currently are expected to affect their decisions if they are being reported under IASB. That may not be true, but it certainly seems to us from the reading that seems to be what is emerging, a difference in the level of certainty. And if that's the case, I think it would require some further explanation of why and how that's the case, because it would seem a bit inconsistent and potentially risky, therefore, to have two levels of what is certainty for the same user, still addressing in the end the effect on assessing future cash inflows into the enterprise. And that is one of the potential inconsistencies that might give rise to uncertainty from the users, who are then saying, well, hang on, which is which on this? And is there therefore information that you are now not disclosing under IASB, which, if it had the same lower level of certainty as is considered useful under ISSB, would actually be useful to me? And that therefore you risk excluding useful information under IASB by having a higher level of certainty under IASB, if that makes sense. So that is our first kind of reflection. The second one, it relates again to useful information and is about management stewardship. And obviously the conceptual framework for financial reporting says that the user will require two types of information, one about the economic resources that the entity is using, and the other about management's stewardship of those resources. And to some extent, you can read the first as being the balance sheet and the second as being the profit and loss account. And the profit and loss account, in that sense, is a reflection of the historic management's decisions, where effectively they've been making trade-offs between different options, and that the result of those trade-offs is this level of financial performance being reported. Currently, as we understand it under the exposure draft, the recognition of trade-offs is there, and the governance section suggests that the way in which the governing body thinks about those should be being reported, but the actual quantification of those trade-offs is not. And that appears also to give a potential inconsistency between what is useful information under IASB and what is useful information under ISSB. Because to be useful under IASB, we are expected to quantify those trade-offs, and the report on those quantification is your profit and loss account. Whereas under ISSB at the moment, we're only reporting on the process by which we look at those trade-offs rather than the quantification. And again, therefore, there appeared to be a potential risk of two different levels of understanding what is useful information. And again, that could cause uncertainty for users. And even though we recognize the challenges in that, I mean, you are probably a group of people who thoroughly support and believe in the ability to quantify those trade-offs, and much of our work under SVI and the Capitals Coalition is approaches to doing so. But recognizing the challenges from your perspective on that, it might at least be useful for perhaps to give a sense of the direction that you are planning to bring those two into alignment. Thank you. And then perhaps a bit more of a kind of detail one. To the extent that ISSB covers both the historic decisions, to the extent that management decisions are having an effect on sustainability issues, and those are relevant to enterprise value, but also that there are external effects on enterprise value which relate to sustainability topics. Again, potentially gives a slight difference to IASB, which is only interested in historic management decisions. And I think it would be useful to make sure that any disclosures under ISSB separate those out really clearly. And we weren't sure from the exposure draft whether that separation was actually being explicitly required. But I think for those users who want to be able to read across which of this is comparable to the IASB financial statements, they would need to know the sustainability bits which are the result of management's historic decisions separately from the external impacts on enterprise value arising from wider sustainability issues.